Hi candidates, welcome to another session of Manifested Online Classes. So we are still continuing with the topic number 6 of Advanced Financial Reporting and Analysis. In this particular session, I want us to look on one of the subtopic in that particular topic, which is a topic on integrated reporting. And when talk about integrated reporting, is basically a form of reporting by an organization, whereby the organization will basically report now to the various stakeholders about its strategy, about the governance process, and also its performance in context of the external environment, how it is in a position to do what? To create wealth in short, medium, and also what? Long term. This particular information is very, very important regarding how the organization is able to create wealth, because for example, the shareholders of the organization, or basically the shareholders in a company, will be in a position to assess the ability of the organization, the ability of the entity to do what? To create what? Wealth. So therefore, you can say that integrated report is a concise communication about organization's strategy, about the organization's strategy, performance, governance, and its prospects, So basically here, when talk about the prospect, we are talking of how the organization is likely to do what? To perform in the future in context of external environment, in context of external environment, leads to creation of wealth, in a short, medium, and long term. And long term. So therefore, in this case, we are saying integrated report is basically that concise communication about how the organization's strategy, performance, and also governance. Governance, in this case, this is a process through which now the organization affairs are directed and also what? Controlled. Governance and also its prospect, how the organization is likely to perform in the future, and also in context of the external environment, leads now to the creation of wealth. So how is the organization, or how are all these particular factors make the organization to do what? To create wealth. Remember, in this particular case, we have said that the primary objective of an integrated report is to provide information, or basically to explain to the providers of capital, e.g. the shareholders and maybe the creditors, how the organization create wealth over time, or basically how the organization create wealth in short, medium, and also what? Long term. And basically, we are saying that this particular report, therefore, will contain financial and non-financial information about what? About the organization. So therefore, you can say that the primary objective of integrated report is to provide information to the interested stakeholders, to provide information to interested stakeholders, or basically you can talk of providers of capital, about the entity's ability, to create wealth, over time, over time. So basically the primary objective of the integrated report, we are saying, is to provide information to the providers of capital. And in this case, we're saying that we talk about the providers of capital here. We are talking of parties such as the shareholders who provide capital by buying shares. We're also talking of the creditors, for example, the debenture holders, the suppliers. So this particular report explained to them the ability of the organization, the ability of the company to do what? To create wealth over time. To create wealth over what? Over time. And also on the other hand, what you're saying is that that particular or this particular integrated report basically will benefit now the stakeholders interested in the organization about now that particular ability of the organization to do what? To create wealth over time. And the various stakeholders who are usually interested with this particular report include the shareholders of the shareholders, include the employees, include the customers, include the suppliers, and also include other business what? Other business partners. So therefore, in this case, we can say that integrated report, abbreviated as IR, benefits the various stakeholders, e.g. shareholders, customers, we also have the potential investors, we also have the creditors, we also have the business partners, about the entity's ability, to do what? To create wealth. To create wealth. So therefore, this particular report here usually benefits a number of stakeholders, including shareholders, the creditors, including the employees, about now that entity's ability to do what? To create wealth. Wealth. Then in this case, we can proceed and look on some of the principles which underpin, or basically some of the principles which underlie the presentation and also the preparation of the integrated report. So whenever this particular report is to be prepared, so which principles underlie or basically guide the organizations in terms of the information to be included in this particular report, and also how should that particular report be prepared. So therefore, let's look on the guiding principles. Guiding principles, and we say that the following principles, and in this case, when we talk about the principles, these are is actually the same with the rules. The following principles, or basically rules, we can say underpin, or in other terms, underlie the preparation, and also presentation of the integrated report. Underpins, or basically underlie the preparation of what you refer as, that is preparation, and also what? The presentation of what? Of the integrated report, and the contents and its content and preparation, or maybe you can just talk of its content. So therefore, we have a number of rules, or basically a number of principles which underlie, or basically which underpin the preparation of the integrated report. So basically what that means is that anytime an organization is preparing an integrated report, which will be providing information about how the organization is in a position to create wealth, then we have a number of what principles which underpin or basically which underlie the preparation of this particular what report. So one of the principles is something we refer to as the strategic focus and future orientation. So number one, you can talk over the strategic focus and future orientation. And future what? Orientation. So in this case, when we talk about this particular principle here, that is the strategic focus and future orientation, we say that an integrated report which is to be prepared by an organization should provide insight about the organization's strategy and how it relates, or basically how the organization's strategy reads or basically relates to the organization's ability to do what? To create value. To create what? Value, or basically to create what? To create wealth. So therefore, we can say that integrated report should provide insight about organizations strategy, about the organization's strategy, and how it is related to organization's ability to create value or wealth. How it is related to organization's ability to create value. Or in other terms, to create what? Wealth. So therefore, that integrated report which is to be prepared, we are saying should provide information, should provide insights about the organization's strategy and how those particular strategies which have been put in place by the management of the company are related to the organization's ability to do what? To create value in short term, medium term, and also what? Long term. So the other guiding principle which underlie or basically underpin the presentation of the integrated report is something to do with connectivity of the information. Number two, we have connectivity of information. So basically this is the other principle, or basically we are saying is the other rule which underpin the preparation and also the presentation of the integrated report. Now in this case, when we talk about the connectivity of the information, we say that the integrated report should show a holistic picture of the combination of combination and the relationship between what we refer as the factors that affect the ability of the organization to do what? To create wealth. So we are saying integrated report should actually do what? Contain a holistic, or basically should show holistic picture of the combination and also what? The relationship of the factors that affect the abilities what? Organization to do what? To create wealth. So integrated report should show a holistic picture of combination and a relationship of factors that affects organization's ability to create wealth, or in other terms, to do what? To create value. Connectivity of the information. connectivity. So how the factors, or basically the combination and the relationship of the factors which now affect the organization's ability to do what? To create value, to create wealth in a short, medium, and also what? Long term. So the other principle, which is number 3, which underpin the preparation and also the presentation, that is preparation and presentation of this particular report, is something called the stakeholders relationship. Stakeholders relationship. Number 3, we can talk over stakeholders relationship. So basically in this case, when we talk about the stakeholders, we are talking of parties having some interest in the organization. And actually in this case, when we talk about stakeholders, we are talking of parties such as the shareholders, the customers, the potential investors, the creditors, the business partners, and also the employees. So therefore, the integrated report which is prepared by an organization should provide insight into the nature and quality of the organization's relationship with the key stakeholders, stakeholders. So therefore, you can say that integrated report should should do what? Should show the organization's relationship with key stakeholders, and how it affects organizations' ability to create wealth, or to create value. To create what? Value. So we are saying here the integrated report which is prepared should basically show the relationship, that is now the nature, the quality of the relationship between the organization and the key stakeholders, and basically how it affects the abilities organization to do what? To create wealth or to create a value. To create what? Value. So the other principle which also underpins the preparation of this particular report is something to do with the materiality. Materiality. So basically when we talk about materiality, this comes from the word material, and actually when we talk about materiality, we can say is like the significance, is like the importance of certain information as far as the decision making process is what is concerned. In this case, we say that an integrated report should disclose information, or basically should disclose matters that affect the organization's ability to do what? To create value. So the integrated report should disclose that particular factors, those particular matters which do what? Which affect the organization's ability to do what? To create wealth. Integrated report should disclose matters or factors that affect organizations' ability to create value. Basically, what that means is that according to this particular principle of materiality, those particular factors or those particular matters which by the end of the day do not affect the abilities or the ability of the organization to create wealth or to create value in a short, medium, and long term, they do not need to be included in this particular what? They do not need to be included in this particular what? Report. So let's proceed and look on the other principle which underpins the preparation and presentation of the integrated report. So that is principle number 4. That is number 5. Number 5. So when talk about, or basically number 5 here, we talk of conciseness. We talk of conciseness. So when talk about conciseness, remember from our definition, we have said that integrated report is a concise communication. Is a concise what? A communication. Basically what that means is that the integrated report which is prepared by any organization must be concise. Must be what? A concise. So mean that it must include sufficient information which will help now the various stakeholders to understand the organization's strategy, governance, performance, and prospect without being burdened with less relevant what information. So therefore, in this case, we can say that integrated report must be concise. Must be what? Concise. In other terms, it should not contain irrelevant information. It should not contain irrelevant information. It should only contain that particular information which will help the various interested stakeholders to do what? To understand the organization's strategy, performance, and also governance, and how that enable the organization to do what? To create wealth. To create what? Wealth. Then we can talk of the other principle, which is principle number 6, and that is a principle of reliability. The principle of reliability and completeness. Reliability and completeness. Reliability and completeness. So basically, when we talk about this principle of reliability and completeness, it basically means that the integrated report which is prepared by an organization must contain matters which are positive and also what? Negative, in a balanced way and without any material what? Error. So that means that the integrated report must be complete. Must be complete means that it must contain all material matters. All material matters. When we talk about material matters, these are those particular matters which will help the various stakeholders to be able to do what? To understand the ability of the organization to do what? To create wealth. So therefore, we can say integrated report must do what? Must be complete. Must be complete, complete, and reliable. Reliable means that it should not contain errors. And reliable, or basically we can say, must be complete and should not contain material errors. Should not contain material errors. Otherwise, if the integrated report which is prepared contains some material errors, then we can say that it is not reliable. It is not reliable. You cannot rely on a report which is containing some what? Some material errors. And then we have the last principle, the last rule which underlies the preparation, the presentation of this particular report, and that is something called the consistency and comparability. Consistency and comparability. A consistency and comparability. Consistency and comparability. So basically the word consistency come from the word consistent. Basically what that means is that the integrated report which is prepared by the organization should be prepared in the same way, in different years. In different what? Years. So the company should not keep on changing the manner in or basically the way in which now the integrated report is being presented or is being prepared. So it must be prepared in the same way. So this will basically help now the various stakeholders like the shareholders, the customers, the employees, in terms of maybe comparing the ability of the organization to create wealth in different years, in different what years. So therefore, you can say integrated report. Integrated report must be prepared in the same way, of a different, or maybe in different years, and in this case we are saying that this now will help the various stakeholders, like the shareholders, the employees, to do what? To compare the ability of the organization to create wealth equally in different what? In different years. So therefore, we have those as the 7 principles which underpins the preparation of the integrated report, that is strategic focus and future orientation, connectivity of information, shareholders relationship, materiality, which is number 4, conciseness, whereby we have said integrated report should be concise, should only contain information which is relevant, and then the other principle is reliability and completeness, and the other one is consistency and comparability. So finally, let's look on the content of this particular report. So which information should be contained in the integrated report? So we look on the contents of integrated reports, and from our definition we can be able to come up with a number of contents, because we defined an integrated report as a concise word communication about how the organization's strategy, performance, governance, prospect, and in context of the external environment lead to the creation of wealth. Lead to the creation of what? Of wealth. And therefore, this particular report, from our definition number 1, we can say it includes information about governance. Governance, we are talking of how the affairs of the company are controlled and managed. Information about the composition of the board of directors, information about the organization structure. All this particular information will be included in the integrated report, and basically how the governance process of the organization help the organization in terms of creating what? In terms of creating wealth. So the other content of integrated report is the business model. The business what? Model. The business model, how the company operates. So the other information is something to do with the outlook of the organization, how the various stakeholders are able to view the organization. Are they viewing the organization in a positive or basically in a negative way? So this particular report here will also contain information about the performance, maybe how the company is performing, and this is purely information about the financial performance. The financial what? Performance. So the other information which also need to be included here are the risks and opportunities. So some of the risks which the company is likely to face in the market, and some of the opportunities which are equally available in what? In the market. Available in the market. So the other information or the other content of this particular report here is something called the organization overview and external environment. Organization overview and external environment. Organization overview and external environment. Basically, when we talk about the external environment here, we are talking of some of the external factors, or we are talking of the macroeconomic factors which are likely to affect the entity's ability to do what? To create wealth. To create what? Wealth. So equally here, or the other content, we can talk of the strategy. Is something we can get from our definition strategy. So those particular strategies which are put in place by the management, and something to do with the resource allocation. The resource allocation of the resources, allocation of the resources. And finally, we have information about the basis of the preparation and presentation of this report. Basis of preparation and presentation of integrated report, of which in this case, when talk about the basis of preparation and presentation, the management of the company here will be explaining to the stakeholders that they prepared the integrated report based on these particular principles. Remember, here we have talked about 7 principles which underline out the preparation of what we refer to as integrated report. So therefore, we have those as some of the elements, or actually some of the contents. Actually, these can also be referred to as the elements of the integrated report. Anytime an organization prepare an integrated report, then that particular report should contain those particular element or content. That what need to be covered as far as the integrated report is concerned. So, and therefore, here you need to be in a position to define what is an integrated report, and also to know what is the significance of this particular report in an organization. What are some of the principles which underpin the preparation of this particular report, and which information need to be contained in that particular report. So before we wind up, I want to give an assignment here. So we have 3 questions. Question 1 reads, explain what is an integrated report. Number 2, explain the guiding principles which underpins the preparation and presentation of integrated report. Question number 3, explain 8 contents or elements of an integrated report. So that is a assignment as far as that subtopic is concerned. So we stop at that particular point. See you in the next session.